All right, let's talk about September 18th, 2024. This wasn't just another good day for the US stock market. This was a day for the history books. We're going to break down exactly what happened, and it all starts with one, frankly, unbelievable number. Look at that, plus 22.77%. And no, that is not a typo. That's the jump Intel saw in a single day. It's this colossal leap that's right at the heart of today's wild story. And we are absolutely going to get into how a move like this was even possible. So the big picture for the day was this incredible wave of record highs. It was a mix of pure euphoria, but with a little bit of caution lurking underneath. It all kicked off with this really powerful broad rally right after the Federal Reserve made its latest decision.
And here's what's so important about this rally. It wasn't just the usual suspects, the big tech giants. The Russell 2000 index, which tracks small-cap stocks, hit a record high for the first time in almost 3 years. That is a huge deal. It's a sign that this optimism is finally spreading out into the broader economy.
This whole day was basically a tug-of-war between two big ideas. On the positive side, you had this landmark tech alliance, we'll get to that in a second, that was just pouring fuel on the fire for a soft landing. But on the negative side, the economic data was so strong it was actually pushing bond yields up, and that got people whispering about inflation again.
So what exactly lit the fuse on this thing? Let's pop the hood and take a closer look at the key engines that drove the market to these incredible new heights.
And here it is, the absolute bombshell of the day. NVIDIA announced a massive $5 billion investment in its old rival, Intel. You heard that right. They're teaming up to co-develop the next generation of chips. This isn't just some small partnership. It's a strategic alliance that completely redraws the map for the entire semiconductor industry.
And the market reaction? It was instant and, well, pretty brutal. You see Intel stock just exploding upwards, but look at its biggest competitors. Both AMD and ARM Holdings ended the day in the red. Investors were immediately pricing in this powerful and frankly scary new threat.
Now, it wasn't just about the chip drama. Other stocks had a fantastic day too. The cybersecurity company CrowdStrike soared almost 13% after putting out a really strong forecast. The companies that make semiconductor equipment, think Applied Materials and Lam Research, they rose too because, hey, if Intel and NVIDIA are building new stuff, they're going to need their machines. And of course, the Russell 2000 jumped over 2.5%, really riding that wave of hope for rate cuts.
But here's the twist. While the stock market was throwing a party, the economic data was telling a slightly different story. The numbers were strong, maybe a little too strong. Strong enough to calm recession fears, but also strong enough to spark that other worry, inflation.
And the evidence was everywhere you looked. Weekly jobless claims came in lower than expected, which means the labor market is still really tight. The Philly Fed Manufacturing Index didn't just beat expectations, it absolutely crushed them. And internal data from Bank of America showed that people are still out there spending money. Every single one of these points to an economy that's running hotter than anyone thought.
This quote from the legendary investor David Tepper just nails the market's mood right now. I mean, everyone knows stock prices are expensive, but you don't fight the Fed. When the Federal Reserve is on your side, providing support, investors are just willing to look past those high valuations, betting that the Fed has their back.
And of course, none of this is happening in a vacuum. On the global stage, it was like a giant game of tech chess. The US and the UK announced a new partnership on AI and quantum computing. At the same time, China deepened the tech divide by banning purchases of certain advanced US chips. And just to mix things up, some positive comments on trade from President Trump gave the market a little temporary boost. So that was the day, an incredible rally built on tech optimism and a friendly Fed, but with this shadow of inflation in the background. So the big question is, what happens next? Let's walk through 3 possible paths from here.
Okay, path number 1 is the Goldilocks scenario. It's what the market is hoping for. Growth keeps going, no recession, and the Fed is supportive. The strategy there? You'll lean into growth stocks. Path 2, inflation comes roaring back. If the economy overheats, the playbook flips. You'd pivot to value stocks, things like energy. And then there's path number 3. Recession finally hits. If high rates take their toll, investors would likely run for safety in things like cash and bonds. All right, let's bring this all together. What's the final verdict on where we stand right now? And more importantly, what are the biggest risks you need to have on your radar?
Right now, the dominant belief is that we're in this Goldilocks environment. Not too hot, not too cold, just right. The economy's growing enough to help companies make money, but it's not so fast that it's going to force the Fed to slam on the brakes. For many, that big rally in small-cap stocks is all the proof they need that this ideal scenario is really happening.
But there are two big risks that could shatter this perfect picture. First, inflation. What if the strong economy plus easy money from the Fed makes prices surge again? That would be a nightmare. Second is the US-China tech conflict. If things keep escalating, it could seriously mess with the supply chains of the very companies that are leading this rally.
And really, that's what it all comes down to. For one pretty incredible day, everything just came together perfectly. The market is celebrating this perfect Goldilocks moment. But the one question that leaves all of us with is, how long can it possibly last?